Index investing has gotten quite popular over the years, with the likes of Warren Buffett and other prominent investors promoting it as a low-cost, low-time involvement investment strategy to get you market returns. Now, this video isn't to convince you for or against index investing, but if it's something that you are interested in, we'll be going through the top S&P 500 Index ETFs here in Canada with both hedged and unhedged currency options. Now, super quickly before we jump into the list, if you're looking for a new self-directed broker, or if you don't have one yet, I recently made a video going through my top 5 favorite self-directed low-fee brokers for us Canadian investors. So make sure to check that out in the card up above or the link in the description down below if you're curious what options you have for trading here in Canada. And just a quick reminder, I am not a financial advisor. Nothing in this video is financial advice. It is for entertainment purposes only. Investment carries risk and you may lose your money, so be careful and make sure you know all the risks going in before you place any investments. All right, with that being said, let's jump right into the list. All right, so for each of these funds, they pretty much cover the exact same thing, tracking the S&P 500 index. So for each fund, we'll be breaking down by the institution that runs the fund, the MER, which is the management expense ratio, so those are the fees you pay per year, and the net assets that the fund currently has as of December 20th, 2024. So starting off with BMO's funds, which is a top 5 big bank here in Canada that you may be familiar with. BMO offers the ZSP, which is an unhedged index. Its MER is 0.09% with net assets of 18.8 billion Canadian dollars. Also by BMO, they offer ZUE, which is the hedge version of ZSP. Now, that too only charges a 0.09% MER and has net assets of $3 billion. So a quick explainer before we move on of the differences between a hedged ETF and an unhedged ETF. So unhedged ETFs expose your investment to currency fluctuations between the Canadian and the US dollar. So this means your returns not only reflect the performance of the S&P 500, but also the US dollar Canadian exchange rate. So an example of recent history where the US dollar has been quite a bit stronger than the Canadian dollar, which has been quite painful for us Canadians, your returns will increase because you're both long the US dollar and the S&P 500. But the opposite would also be true if the Canadian dollar were to strengthen against the US dollar and you were in an unhedged ETF, your returns would decrease. So in contrast, hedge ETFs use derivatives to neutralize any currency risk, so you don't really have to worry about that. So this allows you to closely mirror the S&P 500 returns without any influence of the USD Canadian conversion rate. Next up, we've got Vanguard's VFV, which is an unhedged ETF and is the largest here in Canada with $20.14 billion in net assets. Vanguard 2 only charges 0.09% MER. And a quick fun fact about Vanguard, Jack Bogle, who founded Vanguard, was the first to create an index mutual fund for individual investors back in 1976. And he was just a big player in low-cost index mutual funds, now ETFs. So we could thank Jack Bogle for a lot of our low-cost ETF options that we have today. Now, if you're looking for the currency hedged version from Vanguard, they offer VSP with a 0.09% MER and net assets of 3.8 billion. Now, moving on to BlackRock, also known as iShares, they offer XUS, which is their unhedged option, charging a 0.09% fee with net assets of $8.4 billion. The hedge version of this ETF is XSP, again 0.09% fee and assets of $11.3 billion. And last on the list, we have Global X, which is formerly known as Horizons, ticker HXS. Now they have the highest MER on this list at a shocking 0.11% with net assets of $4.6 billion. Now, one thing to note about HXS is it's the only ETF on this list that doesn't pay any dividends, and instead they're reinvested into the fund. So this could be more tax efficient, but of course, do your own research because I am not your financial advisor. So I will leave all the fund links down below so you could go check out the most recently updated information for yourself because it may have changed after recording this video. So make sure you go check out all those links down below. Again, slight differences between the fund, between the different fees, and whether you want currency or unhedged currency options. So those are some variables that you're going to have to think about before you make your investments. But that's all I've got for you today. Thank you so much for watching, and I'll see you in the next video.